Are you wondering how to apply for a mortgage loan and actually get approved, whether you're a first-time homebuyer, self-employed, or buying an investment property? The mortgage process is easier than you think if you know the steps. In this video, I'll show you how to apply for a home loan step by step, how to get pre-approved, and how to avoid the most common mistakes that can delay your approval. I'm Jennifer, a mortgage loan officer, and I help homebuyers and real estate investors get approved when other lenders say no. If you want tips on home buying, mortgage approvals, and real estate investing, make sure that you subscribe to my channel. The first step in applying for a mortgage is understanding your financial picture. Mortgage lenders look at four main things: your credit score, your income, your assets, which how much money you have in the bank, and your debts. Included in those debts are your student loans. So if you have student loans in deferment, they do get calculated as part of the debt. And depending on what loan program you use, we do assign a fake payment for qualification purposes only. So your credit score, it affects your interest rate and your loan options. So the higher your score, the better your interest rate, the lower the PMI insurance is. But here's the good news. You don't have to have perfect credit in order to qualify. So as a lender, I also look at your income and your debts to calculate that debt to income ratio, which determines how much you can afford. So my advice, if you are self-employed, is make sure that you give your lender 2 years of tax returns upfront. If you're unable to get qualified from what you claim as income on your tax returns, because when you're a business owner, we're looking at net incomes after you've written everything off. When you're a W-2 earner, we're looking at gross income. So prior to taxes being taken out of that income, that's how we look at things. Another way that I qualify self-employed people is by doing bank statement loans. Cross Country Mortgage has some great interest rates on those types of alternative products. A pro tip is, if you're planning on buying a home and you are pre-approved, do not apply for any new credit or make any large purchases before that mortgage loan closes. Sometimes it can really throw off that debt to income ratio. So most people, prior to going and looking at houses, they get pre-approved. That's when you're really filling out the mortgage application. You're putting your name, your social security number, your date of birth, your address. We need a 2-year history of where you've lived. So if you've only lived at your current address for a year, we're going to need the previous address. We need a 2-year or longer work history. So if you've changed jobs recently, we're going to need to know where you worked prior. So we go through this whole pre-approval process. We do a soft credit pull. If you think your credit score is low, sometimes I'll do a hard credit pull so that I have the full information, so that I have all the court records and stuff like that come with a hard credit pull. The purpose of a pre-approval before you go and start looking for a home is so that you know exactly how much you qualify for. Sometimes people start looking online and they fall in love with homes that they don't actually qualify for, or they don't really understand how much that payment really would be. So it's important to do this pre-approval process. And then another thing that we discuss in the pre-approval process is how to make your offer stronger when you're buying a house. In some markets, or even just some pockets, some neighborhoods, I am seeing some multiple offer situations. And in that scenario, we need to figure out how to make you look like the best person on paper. So as you're getting pre-approved, as you're filling out the application, either with the loan officer over the phone, face-to-face, or through a link that the loan officer sent you of their application, we're going to need proof of income. We're going to need bank statements. We're going to need to do a credit check. So I would highly recommend, prior to contacting the loan officer, I would find 2 years worth of W-2s. So it's 2026 right now. So we would need 25 and 24s. I would get together a month's worth of current pay stubs so that we can see exactly how you're paid. We will need 2 months worth of bank statements, all pages, not just the front page, in order to see what kind of assets you have for a down payment and closing costs, whether we need to ask the seller to pay some closing costs or not. So another important thing is if you don't want to go to the trouble of uploading bank statements, etc., if you know your bank and your logon information for your banking app. I know CrossCountry, when I send a client a pre-approval application, they're able to link their bank account to their CrossCountry application, which just gives us that 2-month snapshot of their bank account. So it makes it a little bit easier for the clients to not have to go get bank statements and provide them. So I can typically, if buyers have all their information, I can typically get a pre-approval out within a couple of hours. So, and remember, this steps gives you clarity and it gives you confidence before you start house hunting, because I also provide a closing cost estimate. It's not perfect numbers, but it gives you an idea of how much money you're going to really need to close on a house. It's going to give you a good idea of what your monthly payment is. So then that way you really know what you're doing going into offering to purchase somebody's house so that it's not a surprise. So there's lots of different loan programs, and I, as a mortgage loan advisor, I have a conversation with my clients. I find out what their goals are. What are they doing with this property? Are they living in it? Are they renting the property? Is this their first home? Do we need to look at down payment assistance programs? So when you're working with the right mortgage professional, it really does make a big difference because they're going to have a conversation with you, not just send you an application and have you fill it out and you kind of hope that you'll get approved in order to go buy a house. So I think it's very important to have a full conversation with your mortgage loan advisor. I think it's very important to not work with a company that passes you from one person to another person to another person to another person, to where every time you have a question, you don't know who you're talking to. They have to read the notes in the file. I highly recommend that you use someone that you can pick up the phone and talk to, that you can text message and have your questions answered. So once you find a home, then we actually submit your true loan application. You know, it's already been filled out. The application was already filled out at the pre-approval process. But now what happens is we will order your appraisal. And then once your appraisal is ordered and we have updated income documents, asset documents, updated credit if we need to, and we have a property address, then we're able to put you through the underwriting process. And what that is another person that will look at your file and assess whether you are a good risk for the bank or not to give a loan to. Now, I always run all of my clients through what's called an automated underwriting system before I even give a pre-approval. So I have a very good pulse as to whether this person can get a loan or not. I never submit something to underwriting that I think is not going to happen. So your loan officer, aka me, I will guide you step by step through the process. Your realtor will be doing the exact same thing. So your realtor will be discussing with you all of the different milestones, when your deposit money is due. It's good faith money showing the seller that you're really serious about buying their home. They will help you schedule an inspection on the home so that you know if there's anything wrong with it or not. And then me on the other side, I will be asking you to sign disclosures once you identify a property. Then we send out disclosures for that specific property. And some of those numbers in that disclosure cannot change. There are some numbers on that disclosure of things that you could shop for or that potentially could change, such as title fees, title work. Those are all third parties that either the seller or you yourself as the buyer will select who you want to use. And so those are things that are what we call shoppable. And those items could possibly change in the dollar amount in the total numbers, but the lender's fees cannot change, etc. So at this point in time, you're going through the process. You've got your disclosures. You have a good idea what it is that you're going to need for closing. They are not final numbers, just to let you know. We'll go through the mortgage process where then your file will go from a processor who just looks to make sure that I have all the paperwork in the file. Then it will go to the underwriter who will then look and review all the information that we've submitted. The underwriter will then say, yes, I like this file, but I need additional information. Typically, that's what happens. And that's the point you get the conditional approval. Then we reach back out to you. We get any additional information that we may need for a clear to close. We finish doing everything that we do on our end, and then you will get a clear to close. Once you get a clear to close, then you will get the final numbers for how much you need to wire to the title company in order to close on your loan and get the keys to your house. So it's not until you get that final clear to close. So I would say that if you're in this process or once you get into this process, that you be super responsive to your mortgage lender. So then that way you can get that clear to close early. So then a few days prior to closing, you have your final concrete numbers. You have time to go to your bank, wire the money to the title company, and do your final walk through the day of closing, and then be able to get your keys. That's in a perfect world that all of that happens. So if you're thinking about buying a home, refinancing, or investing in real estate, the best first step is getting pre-approved. I specialize in helping first-time home buyers, self-employed borrowers, real estate investors, and buyers who are told no by the lenders that work for builders. I get a lot of reject business from builders who can't do loans for people. So call or text me at 561-295-2005 for a free consultation, and I'll help you understand your options and get approved. And if you found this video helpful, make sure that you like, subscribe, and share it with someone who is thinking about buying a home.